Today, we will talk about investing and the different types of investments available to beginners. Investing is the act of allocating resources, typically money, with the expectation of generating income or profit. This can involve directly starting a business, purchasing assets like real estate, or investing in financial instruments like stocks and bonds. Investing is about growing your money over time. It involves taking on different levels of risk in the hope of earning a return. The greater the risk, the higher the potential return, and the range of investments is extensive, from low-risk bonds to higher-risk stocks, commodities, and derivatives. There are many types of investments to choose from, including stocks, bonds, funds, investment trusts, alternative investments, options and other derivatives, and commodities. Each investment type carries its own set of risks and potential rewards. Investing can be done by individuals through DIY investing with accounts at online brokerages, but it requires a lot of education, skill, and time. This approach can allow for low-cost trading and greater control over one's investments. Investors who prefer professional money management typically work with wealth managers, who charge a percentage of assets under management as their fees. This approach provides the convenience of delegating research and investment decision-making to an expert. Here are 3 key takeaways. 1. Investing involves allocating resources for the purpose of generating income or profit over time. 2. Risk and return are interconnected in investing, with higher risk typically associated with higher potential returns. 3. Investors can take a do-it-yourself approach or seek professional money management services. Hope this would help. Thanks for watching.